Good day, this is Graham Bibby on the 31st of December 2014, speaking to you from the heart of Asia. Nice sunny day here. And I just really want to get into perspective what happened last year in the global stock markets, especially in the US. If any of you listening were watching last night, any of the famed money programs of CNBC, Bloomberg's, Reuters, or CNN, I guess you'll be wondering what's been happening because they're painting one picture, and obviously they're in the business of selling people to follow investments, and the markets certainly reacted very differently to the story because I want to start off with the Dow Jones Industrial here. We have ended the year up, and the up is a reasonable amount, but that is not how the year went, and that's not how the trend went. The trends have been reversing numerous times this year, and it seems almost like an end of year manufacture for the markets to end on a high, because there certainly wasn't a trend. So we start off with the Dow Jones Industrials, and I have to tell you, there's probably going to be two, if not three videos coming to you today, because I don't know how I'm going to get all of this information into one YouTube video in the permitted time that the YouTube allows you. So there might be a part 1, 2, and 3. Let's see how we go time-wise. Right now, let's just check out. We can see where we are on the time front. Let's get the clock up there. Yeah, so we're just in a 1 minute 46 seconds. So the start of the year, the market was up here, and as you can see, we started off the year with a major sell-off, and then we rallied and went sideways. Then we tried to break out to the upside. Then we ended down by August. Then we tried to break out to the upside again. Then we ended in seriously negative territory by October, and then there was this huge one-way action, no correction, all the way to beginning of December. And bearing in mind I follow trends, so I need to know that a trend is reversed. I need a correction point in order to place a stop loss, so I know where to exit if the trend reverses, and then we can make some money. But there was no possible time to do that in the index. There was time to do it in individual stocks. As you know, we've been in and out of the market 4 or 5 times this year, which is very frustrating. But having done this for over 35 years, I know that you do periodically get these occasions where markets keep reversing, and historically, a year, or maybe sometimes a little bit longer than that, we do get clearance of that continuous reversal trend, and then you get a movement to the upside or the downside. So as at the middle of December, we were fractionally above the beginning of the year, and then there's been a Santa Claus rally which has put the markets in positive territory. The Nasdaq, which has outperformed most since the beginning of the year, started off over here, had the sell-off, then broke to new highs. This breakout normally means we're going to get a substantial move to the upside, only to find it reversed to new lows. Then we broke out and went above the previous high, which looked good. Then we started to have a reversal again. Then we decided to go higher, and then a huge sell-off back below the start of the year, and then the one-way action we saw earlier in the previous chart, and then the sell-off into December, which looked really negative, and then the Santa Claus rally. So these reversal in trends are probably the worst situation for my trend following system, because I need to have a trend, and a real trend, that lasts hopefully 2 to 3 months. Then I get a signal, I go in, I place a stop loss, and then the market moves higher with a correction. I then raise the stop loss, and then we have a margin there to lock in some profits. Here, there's no real correction in the market, and we're looking at the market as opposed to talking about individual stocks, because if I talk about individual stocks, we'll be here for some time talking. The Russell 2000 is probably even a better sign of what happened during the year, because this is January, and then we started to break out. This is looking very good for the beginning of the year, and then the huge sell-off, breakdown below these support levels, then one-way traffic up, then a trend down, then we had a trend up, which reversed to a trend down, then a trend up, which then reversed, and then we fell below this low, this low, this low, this low. This was looking extremely negative at the middle of October, and then we had this one-way action, boom, 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 no real trend setting, and then into December the sell-off, and then the year-end rally. So we've ended up from where we started at the beginning of the year, but huge volatility in between. If I'll just want to show you one other thing, if I can find it in this particular slot. This is Japan, and this shows you beginning of the year. Don't forget, there was a lot of promise about Japan, about coming out of its it's been in a deflationary cycle since the end of 1989, so virtually 25 years. But in January, we had the huge sell-off, which all markets did. It had a rise, but couldn't even get up to where it was before. And then we had sell-off, attempted a rally, sell-off, and then we had this significant rally. We're getting below the January levels, couldn't make any progress. Then the huge sell-off that everything had until October, then one-way action, then down, and we are here. So that's the beginning of the year up here. It is negative. Now this is Asia, X that Japan. We ended the last year here, and we're here. So we're practically the same level we were at the beginning of the year, and we've had the significant rise in between, significant sell-off. If we look at Hong Kong, for example, if I can just let's put up Hong Kong, EWH. I'm using ETFs because they mirror the market. The year started here, and we've ended here, exactly where we started the year. And in between, huge volatility. Big sell-off, big rise, big sell-off, big rise, big sell-off, big rise. Sideways action, breaking out. This looked really positive. Historically, if you get this kind of movement upwards, we're going to go in this direction. And then we had a significant sell-off. Then we had the rally. Then we had the huge sell-off. And the market's gone nowhere. So, what I want to do is get out to you the truth of what's gone on in the markets in the year. I'm not trying to sell some book about, watch my program and, everything's rosy. This has been a year of reversing trends. And my mantra is the ultimate business is the business of investment in the stock market. But my job is to protect you as much as possible from the downside, which means limiting downside. You can't erase the downside. So when we get these downtrends, I need to protect, because we don't know when they're going to turn into a global financial crisis or the tech wreck of 2003. So if you're with me, I'm very happy that you are with me. If you're not with me, I believe you should be, because I will always protect you from the downside. And when normal service is resumed, my stocks are undervalued with superior earnings growth, and in my fund optimization service, we're following trends, and I have a really good performance of making returns following those trends. Now, I did say that time is going on, so I just want to show you Singapore before I sign off this YouTube, but I've got some great news coming. So this is part one. You really need to see part two, because I'm going to show you how my Insider Club members from Australia and Singapore benefited from my knowledge on currency. So this is Singapore. This is already in a decline towards the end of last year. And here we were at the end of last year, and here we are this year, marginally below. So we had this significant sell-off rally, not back to the year of start highs, then a sell-off, and then this one-way action here, which looked great. Then we couldn't make any progress. Then the sell-off that you keep seeing into October, then the rise, and then the sell-off into December, and then a feeble rise since then. So no progress. So what I want you to do now is you just got into perspective the volatility of this year. This is not normal. Normally you get trends up or trends down. So please follow and re-listen to this YouTube and get ready for YouTube number 2, which will follow this one.